Disclosure: nothing said on the Hivemind is a recommendation to buy or sell securities or tokens. This podcast is strictly for informational purposes only, and any views expressed by anyone on the show are solely our own opinions, not financial advice.
Hi everyone, my name is Jose Macedo, and welcome to the second episode of the Hivemind podcast. The goal of the podcast is to provide an inside look into what we like to call the Delphi Hivemind, bringing together some of our brightest minds from each of the divisions to share insights, alpha, and shitposts. Today with us we have Ceteris from our institutional research arm, who focuses on blockchain infrastructure and DeFi. We have Jan Lieberman, managing partner at Delphi Ventures, and Ventures associate Duncan, also known as Flood Capital, prodigious shitcoin scavenger and investor. I lead Delphi Labs, our protocol R&D arm, focused on incubating and accelerating new Web3 primitives. It's been a hectic week in crypto with Friend.tech launching, Base, and some macro stuff, so we're going to dive into all that.
Okay, so I have a pretty extensive sleep setup. I got like a fan, an air conditioner, blackout blinds, a Faraday cage, and like a mat that goes under my bed to like block out all the EMF stuff. Then I have earplugs, an eye mask, and I've just ordered the 8 Sleep mattress, so I'll let you guys know how it is.
Oh, so you haven't done it yet?
Girls over? What do they say when they see your cage?
Yeah. No,
Welcome
no one's
to my
seen the
cage.
yet. The cage is new.
You don't get any cell signal in here, so don't worry.
You know what Matt Bridges said? Is like I sent in the cage one day to like the full chat, and Matt Bridges, I was like, this keeps out EMF. And he like forwards me the message. He's like, and girls.
Well, it keeps in girls as well, I guess, in your case.
I was looking at the 8 Sleeps, but I opted for a mattress pad that has the same cooling stuff where it cools into the night and warms up in the morning, just because I don't like the 8 Sleep mattresses as much, and so it was like the best of both.
You can just get a
to pick your
topper.
mattress and then
You can just get the 8
tech.
Sleep topper.
Yeah, it's topper.
That's what I'm doing. All right. Okay.
Yeah. That's what it is.
It's a chili pad is what I got.
Okay.
Thanks.
You're definitely gonna be like drinking young kids' blood and stuff when you're older and doing that whole.
Go
that
Brian
whole shit.
Johnson mode.
Yeah.
Duncan's definitely doing all that stuff.
100%.
Lots of vitamins and stuff. I tried that. Yeah. Okay. We don't need to get into this, but I've tried a bunch of different things. You know, like the all meat diet for a few months.
How was that?
That was good. But it's my girlfriend definitely broke up with me over that because we couldn't go. Like I was the only thing I would eat is steak, and she's like, "Can we fucking eat something else?" And I'm like, "Come on."
Man, I did like a pretty.
Please. We need
I
to
did
eat
like a
something
pretty-
I
else.
draw the line.
I did like a pretty hard cut, like basically no carbs, years ago, maybe like 7-8 years ago. Intermittent fasting all the time. I got so lean that it actually kind of started like fucking me up. Like I was freezing cold all the time. I was tired all the time. I had to put back on like 20 pounds to start feeling like good again. It like messed up my hormones and everything.
Yeah, I used to do that for fights, and it's horrible. That's never again. I just eat whatever the fuck I want now.
Yeah, like cutting. So how does that work? You have to get down to a certain weight, like the day of the fight or the day before or something?
Both, depending on what you compete in. Like in MMA, it'll be like the day before. So then you can do like some really wild cuts where you like water load, and then basically cut water, and you can literally have like 20-25 pound weight gains in like the 36 hours till you fight or whatever. Like it's pretty wild. Yeah, in like a day if you do that properly. The same days you can't do that shit because obviously if you step onto when you step onto the scale, you're literally like about to faint kind of thing. So yeah, it's pretty terrible.
Well,
And also,
my
it's
dad,
just a very unhealthy.
Yeah, I did inadvertent.
when my dad was a kid, he had to make to join certain football like weight heights. They had the like weighing every year, so he'd run around in the heat with a garbage bag on and lose like 10 pounds of water, get on the scale like almost dying, and then good to go.
Is this for wrestling?
No, football. Like
Oh, really?
Yeah, there's like weight.
Why would they?
Well, because it's tackle, and
I've never
so
heard of that.
This in
Yeah.
Canada? They play
Yeah.
football in
Usually
Canada?
they're not. You're optimizing for more weight though, especially in linemen.
Yeah, but you need to. They do the leagues by weight, so they don't have some
Oh,
massive kid just rocking like smaller kids.
yeah, kidding.
Because a
Mine
kid
would
born
way
in
too early.
like a tall
Danny
kid born in
Almonte.
January. Yeah, like
What about you, Jan? How's the belly coming along? I know you had a baby belly.
It's had a kid 11 days ago, so it was shedding weight now due to lack of sleep, but
Belly
that's
Lieberman.
awesome.
Pretty dope.
Yeah, found
you weren't trading Friend.tech on the weekend then.
I bought a couple shares, but I've been not trading anything.
Who'd you
I've
buy?
actually bought shares of people whose group I want to join. I bought. Let me go through.
I bought some
like-
of the Saka.
I bought Saka. Yeah. Who do I have? Will Price, Avi, G Money, Rob, Disclosure, Sisyphus, and that's all I have so far.
Is there like actually any alpha in the chats or no?
Not really so far.
No, that's
Yeah,
general
so-
conversations.
I don't really know how it works that well. Do you want to explain? Like,
Yeah, I mean
basically, why
basically
are you saying you just buy a share and then you get a paid group? With just
people
this
come
share?
in, yeah. When they join, they like trigger this like issuance of their shares. It's all on the bonding curve, and so there's a real incentive to kind of buy up someone's or keys. We should call them keys. They're not shares; they're keys. To buy up someone's like keys early, right? And then you get access to this basically group chat with them. It's for the most part right now, it's a popularity contest. Like, Kobe sits near the top. You've got Ansem up there who's been pretty active with it. And recently you've seen it cross out a bit. Like you got Grayson Allen, right? NBA stars come in. You have FaZe Banks, who I don't actually know who he is, but he's popular. And there's like a bunch of OnlyFans girls joining that too. So the thing is, the way creators monetize here is through volume of their shares being traded, right? Like every buy or sell takes a 10% fee. 5 goes to the protocol, 5 goes to the creator. And so that's actually how they make the money. It's not off people holding your shares. It's actually just on a lot of trading volume. So being someone who is actually pretty like volatile personality, tries to get a lot of activity in their shares is someone
That's
who
not you.
makes-
I guess.
Man, imagine Suzu
Yeah,
last year. His shares would be in it.
Yeah, it's like you have weird alignment, right? You almost
Suzu's
want
actually up
to
there.
incentivize a sell-off and then a buyback because you're better off shares dumping and then returning back to where they were versus just staying constant, like Sarah said. I think it's cool.
But-
I have issues. So one of the concerns I have is just I think the bonding curve is far too steep, and that hinders adoption. So bonding curve just basically means with each new share outstanding, the price goes up. So you buy off the curve, and so there's more shares outstanding, and then to sell, you sell into the curve, so there's less shares outstanding, and price goes down. But the issue is, I think the numbers where it's like if you have, I should pull those up, but basically if you have, around 200, 250 shares, the entrance is like 3 ETH. So, what that does is it really limits the amount of people that can participate in the group. And so I think it limits the audience and kind of, what are potential solutions. It's tough to change the curve once it's already live because, the modification here would be to flatten it, but then you're really rugging existing users. And also you have everyone on different points of the curve, right? Just based on how many shares are outstanding. So where do you start to flatten it? Like somebody's getting screwed. So you either have to flatten it at the most expensive part, which then, it hurts the least amount of people. By the most expensive part, I just mean like racers. Basically, his shares are the highest, so you flatten it there. You could do a share split. The concern is there, so basically each person owns one share. As long as you have one share, you get access to the the conversation. If you have any more, it's basically for speculative
What are you trying to
reasons.
solve
So
here?
if
You're trying to solve the problem that this thing is going to get too expensive if like you can only ever
too
really
quickly,
have
I think
like
it's already too
a couple
expensive.
hundred people, and maybe not even that.
Yeah, at most. I think realistically, you should probably, so there's a couple of kind of paths. One, if you do a share split, you're going to have a massive sell-off because, I'm only going to hold, now instead of one, I have 10 shares. I only need one, so I'll sell the other 9. So you get a massive sell-off there. The way you kind of counter that is potentially adding additional forms of utility to holding more shares, whether it's access to a smaller group or IRL stuff, potentially for kind of like media or like celebrities. I think the thing that should have happened in the beginning was customization of the bonding curve itself. And obviously you don't want the creators coming in and saying, I want this formula, but you can, do that through a UI where they say, I am looking to create an intimate group, or I'm looking to create a larger group. And so, you kind of adjust the curves parameters based on that, and you do it all in the back end. So the problem is once it's all live, it's really hard to adjust without somebody getting screwed. Yeah, and so the other solution is potentially like creating multiple curves for people for different types of access, right? So it's accomplishing a similar goal, but yeah, I think it's just so hard to adjust these once they're live, and I think it's really hard to kind of put the genie back in the bottle on that front.
The hardest part to me is that there's just no clean exit. Like if you're a creator and you're on this now, you have the share price, you don't want to do it anymore. There's no clean way to stop. Like there's really not. The only way to stop is to just stop posting, and then everyone who's holding your shares lose money, basically. You could
The old slow rug.
kind of like, so you could kind of, there's no like real fair way to do this. You're going to screw someone no matter what. What you could do though is all the ETH in the bonding curve. I guess you could just like adjust it to a fixed price and let everyone redeem at that price. Obviously the late buyers would still lose like 75% or so of the value they paid, but that way you also don't create like a rush for the exit or whatever. But that's the biggest thing for me. Like when I thought about doing this, I haven't joined it yet. I haven't not joined it because of like legal reasons or anything. Like so many people are on this now that I don't know about that. But the biggest thing for me is like, I'm going to get bored of this at some point. And what do I do now? I have all these people holding like these keys of me or whatever, and
like, an obligation.
How do I it feels like an obligation, right? And obviously for people who join you like narcissists, like it doesn't really matter, they'll just leave and it's everything's fine. But for a lot of people, I think that they actually care about like the ability to exit gracefully in a sense, and you can't like really do that at this stage, right? So that's what I think is kind of the big. So those are the two biggest flaws I think is that the income's all on trading fees, which you can definitely kind of change that. Like a few people have brought up the ability you could like stake the ETH in the bonding curve, and then like the yield goes to the creator. That's like more and like if you do that, then you're not incentivized for trading volume as much. But it would be that.
If you think about the math on that, it's pennies, right?
You still would make way more in trading fees, So that's the thing, right?
But zooming out a little, Ceteris, like what is the like what's the like is there a real breakthrough here? Because to me, from like an outside point of view who hasn't tried it yet, is just like feels very much like NFTs, where a lot of these collections are really expensive relative to like the utility or value you're getting.
I think it's an access thing too.
Think about someone who is like a really profound writer, and they have like a paid Substack or something. They charge like monthly, yearly fees. Instead, what they could do is they could maybe like fix the price of their shares, and people would deposit, and they would do this yield thing, right? And like maybe your membership, for expensive memberships, this doesn't really work. But if your cost is like $250 to $500 a year, then it would just cause people to lock up like 5 to 10K ETH, and they could get that back at any time. Okay, like the key is that they can get that back at any time. So for the subscriber, instead of actually paying like the $500 a year or whatever, you just put like ETH into.
Who the hell are they going to do that?
Yeah.
Well,
The
I'm trying to
opportunity
think about
cost of
like
that is
what the
massive.
angle is to this,
Ceteris
because
and like 3 other people are gonna go lock up 10 grand to read.
well, you
this
don't lock
guy's
it up.
stuff.
You get it back at any time. So you want to read someone's content, you don't actually have to pay. It's like the opportunity cost you're paying with. You're not paying with.
I know, but like you have to generate the yield on the ETH. It's like you have to leave it there for 6 months or whatever.
Well, no. I mean,
You just like
you
deposit
would have
schemes.
rules around. You'd have rules around like how
Yeah.
often you can enter and exit and stuff.
But yeah, that seems like a bit of a stretch of a use case.
I think the access one is a big one where it's like you can directly pay for access, and the creator themselves can, assuming they had the ability to modify the bonding curve, they can, I want this to be accessible realistically by 100 to 200 people. So right now, right, the 200th share costs 2.75 ETH, right? So, that's a lot. And so, I mean, if you want to keep it exclusive, then it makes sense to keep it at this curve, and then you can actually, respond to people's questions, because it's a limited amount. I think what helps is that there's a permanence to the conversations that are in there. So you message the person, they're the only ones that see your message, and usually what they'll do is like a quote of your question and then a response. But the entire history of everything the creators posted in there stays. So if you're buying, you at least get access to the historical information. But I could see like the OnlyFans element once they add photos being a big one. But at the same time, it's just like so expensive relative to traditional OnlyFans.
I think the idea is cool though. It's also like kind of captures something that NFTs did, where it's like, it's hard to set a fixed price for certain things, right? Like, and that includes like your time and like access to you, like, and there's been a lot of models like this. Like, I think this is like one of those startup ideas that a lot of people have tried. Just like being able to book an hour with someone's time, right? Some famous person's time, and they set a fixed price. Then you could book through this platform, and it kind of just happens. But it's like never taken off. And I think pricing is like kind of an issue. Like, actually pricing an hour of your time. And I feel like with stuff like this, it actually just captures in some way like the value both of the time and speculative value of like future of this person's time, especially if you can end up putting like more cash flows through it, like add subscription revenue or something like that. But I don't know how all that like plays out. I mean, my experience with this thing was I logged on, some random people bought my shares, then I the bots, and then I bought like some of my shares, and then they dumped on me, and I lost like $1,000 or something. So
to your point though, like you can keep that speculative, like. Obviously, the reason why this took off is because people want to speculate on it, right? And you can kind of keep that with your idea of like selling your time and things like that. But I think the difference is when you're explicitly like selling your time and then those are consumed, that there's not this need to like maintain a price or something, right? Because you're selling stuff that is going to be consumed at some point. And so people can still, if someone famous comes in, people can still like speculate on like buying those, whatever like the person decides. If it's like an hour of time, it's like one question, whatever. People can still speculate on that, but at the end of the day, like those are still going to be consumed and like burned, and so there's no need to like maintain it in perpetuity. And that's the thing with this thing is that you have to. It's like implied that you have to maintain this price in like perpetuity, basically, unless everybody just leaves, right? So if one person with a high share price now, this is where it's going to get kind of like contentious, I guess. One person with a high share price doesn't want to do this anymore. They can like leave, I guess, but they're also going to get like shit on a lot. Versus if the whole thing kind of just like tails off, then nobody, there's like there's no blame, right? Because now everybody's just kind of like tailed off and it's all good.
But I still feel like we're not really getting to like, why is this better than like a paid group or OnlyFans, or is this just making it easier to do? Like, why is this better than launching an NFT collection or having an OnlyFans or having a paid group? Like, I really don't get why.
I think the onboarding was cool. The onboarding's cool because you like social wallet, which I think is going to be a way bigger thing moving forward. So it's a big thing for like normal people who don't want to deal with like private key seed phrases, all that stuff. You just sign up with like a phone number or a Google account or an Apple account. And then it creates this like MPC wallet for you. So that aspect is very cool. They also like bypass the Apple Store. So you actually just install it like through your browser. So that like bypass the Apple tax and everything.
Yeah, I think that UX pattern is going to be like a bunch of people are going to start using that now. Yeah, it was pretty smooth. But I don't think OnlyFans and like or Patreon or whatever are like the right comparables though. You're not just paying for their time. You're like speculating on the future value of their time, and that's like both a bug, right? In the sense that Ceteris says like it's not clean. You're not just paying for like a service which is like well defined, well as well defined as OnlyFans can be, and then you get like your value out of it. It's actually like this amorphous thing where you can't really ever exit. It's unclear what the expectations are and stuff. But that is also the beauty of it, right? Some people you'll buy and they'll end up doing a lot of stuff, putting a lot of revenue through it, I imagine. Whereas others won't. I think that's part of the bet here.
Yeah, the unfortunate thing is it's like the individual who actually like there's a built-in incentive to eventually like send a message to your group saying I'm done with this, because you're better off having everyone sell it down to zero than actually keep your price high from like purely selfish creator perspective, because you're getting fees on volume. It's just unfortunate that you can't really tweak this once it's live because of the financial implications. Like there could have been a play version of this done first with and then like a real one. But
yeah, if it costs over like 3 ETH or something to join at 250 people, then this is going nowhere.
No, but it would make sense if like if you were
that curve makes sense for like Saka and Kobe or something.
Or like you're just like some big celebrity and you wanted to do a few IRL events, and you say, the shares, the price of the share should have started high and then continue to get higher. And you can do like IRL events for some of the biggest fans, and you have to prove that you own this to go and stuff like that. I think that there's elements there, but again, it boils down to having like customization around the curve rather than kind of having a one size fits all. I saw one idea on Twitter, somebody basically combining Pendle with this and separating like YT and PT kind of shares. So it's like one get the access to the channel and the other allow for like speculation on the price.
Yeah, like
yeah. How long has this been happening for? Like a week?
Oh, just over a week. I think it was like the 11th. But no, like I think the right model has a stable part and a speculative part to like on that. And I'm not saying the Pendle model is like the right one, but I do think that you have to have the main model needs to be somewhat stable, and then you can allow this side event of speculation that maybe has to do with things you consume, right?
Yeah, I'm trying to think how this would work with something like, the ad model, like something like Instagram. Like let's say you thought this person was gonna get really famous, and you like bought their Instagram shares or whatever, and then got like a percentage of like the ad revenue they generate from like people like scrolling through their posts. Like that could be interesting on the speculative side, but you need to like onboard a lot of users in order to do that. And I feel like, that we're probably still pretty far away. Like it'd be cool if you did this like on Twitter, right? Like if you could buy shares in someone and then see like people are starting to earn ad revenue now, like that seems like it has a bit more of a path to like making sense.
I think like gating purchases, there should have been some form of gating purchases based on like owning a Twitter account, because this thing just got botted endlessly. So either that and or adding in like the ability to only maybe buy one share to reduce just like blatant speculation at the expense of adoption. But like, if you have bots just buying up so many shares, it becomes prohibitive and a bit frustrating for people who are just like, I showed up, a week late and now I have to pay way more.
Yeah, people don't want to buy that either because they see that bots are ready to dump it too.
Yeah,
so
exactly.
It's like people you might join, and if any of us like join, bots would buy up some amount, right? Because we have like decent followings, and then so other people see that it's like, oh, you're all held by bots, and it's like if you're gonna buy, then you're like the bot's extra liquidity. These bots have made a lot on like everything's MEV. Everything always becomes some like MEV bot. searcher extraction.
Yeah, I don't have a great take. I mean, do we think this is just going to be like a flash in the pan, or it's actually going to iterate into something real? Maybe like, does anyone think it is?
I'm leaning towards flash.
You haven't even used it,
but I know. But
why are you hating?
That's my
I I do feel a guilt to respond to questions though in there because you have shareholders, which is a feature, right?
Yeah.
Like people ask, I'm like, oh, I gotta answer. Like the guy bought some shares.
Oh, you're answering questions on there. I'm going to buy some Yan shares.
Yeah.
I think they're definitely gonna try and change stuff. I just don't know what that is and if you can actually like change it to something sustainable at this point, to Jan's point, without, you're gonna have to like kind of screw someone. I guess the goal now is like, how can you screw the least amount of people and keep it going?
I think you could keep going if they like do the token right, like if they time things right, like they build up on the token, they launch it, like that could extend it for.
I mean, one thing I'll say is like people using this because they think they're getting like an airdrop or something. Like they're probably paying way more in fees buying these shares than they're ever going to get like an airdrop, and it's kind of just a direct stimulus to influencers.
Paradigm might be generous to us.
Yeah, Paradigm does back some big token airdrops.
So I think the next thing we're going to talk about on the
Well, and yeah, before that, sorry, because like the treasuries amounted a pretty decent amount of ETH already, right? So like the protocol itself, obviously there's inflated volumes right now in the beginning, but yeah, it does generate a pretty material amount of fees. So I think like as a result, the token would be valuable.
Yeah.
They could also do something with the treasury to try and like fix it. Maybe they add like some.
Ceteris obsessed with his 3% yield.
Maybe they have. Maybe they like start creating like some floor price or something. I don't know. They can, but they have like a pretty big treasury. They can maybe try and do something with that instead of keeping it.
There's also a lot of innovation can be built around the primitive, right? There's already someone that's built that dope front end. What's that called?
Friend.tech?
Yeah. And like people have.
Wait, what is it? Is it like a BitMEX front end or? That's cool. Like in the BitMEX UI.
Yeah.
And someone did an index perp as well for like the top 10 or top 20, whatever. There's some drama that they changed it overnight. But yeah, there's going to be some cool stuff built on top of this, just given how much attention it's grabbed. It's also kind of a testament to how dead stuff is, that kind of this is like.
Yes, I was just about to say that. I was like, fucking everyone's talking about this for the past 8 days because we have nothing to do.
I don't know. At the same time, though, like when BitClout came out, which that was during bull and high volatility, and there was still a lot of attention that went to that.
It's true,
despite knowing that like the investors had massive pre-mines and it was so ruggy. I think it's just like different.
Yeah, one thing I want to say on this is like the things I do like that they did is that they didn't do that massive pre-mine thing. They also made people opt in instead of just automatically trading people, which is something that BitClout did, which is also kind of like scummy. So I do think they've made like some decent improvements in that aspect.
Yeah.
But yeah.
So what about the fact that it was launched on Base?
Yeah, that's where I was.
What do you think about Base?
That's where I was headed to.
What do you think?
Ceteris, I guess you have your take on this.
No, I mean right now it kind of just feels like there's this big like EVM roll up farming season. People are kind of just hopping around trying to like find like the new primitives. I mean Base had kind of a very shocking amount of rugs that I was not really expecting when it was announced. So that's kind of what I see, right? But what's good with this app is that every single like EVM L2 has basically the same stuff. Like I guess Arbitrum you have GMX, which is different. Optimism, you kind of have like some synthetic stuff, right? But for the most part, you're creating this roll up. You're making a Borrowland, you're making an AMM, you're making like a stable coin or something. And you're always just recreating the same copy pasta like farm primitives over and over again. And so this app has been truly differentiated. It's brought in people from outside, just people using like roll-ups and everything. And so that is what I think is like
And there's no
Good about
airdrop,
this
right?
app,
There's
too.
no like, well, Friend.tech might have one, but like Base itself has no airdrop, and I think it's already flipping like Arbitrum and pretty much every other L2 on like transaction count and stuff like that, which is pretty impressive.
Yeah, but how much that's like just Friend.tech bots.
I mean, Bald did some damage too before SBF went to jail.
It falls back to 7.5 mil.
7.5 mil? Oh, damn.
What did it get up
100?
to?
No.
Yeah, it got close. I think it got like.
You got it over 100.
I'm pretty sure it got really close.
I think it got nearly 100.
I don't know why Dex Tools is showing.
One thing is that there's been a trend of like these devs with, or not even devs, just people who are deploying stuff, who have gone traction and then they're rugging pretty quickly, even though they've gone traction with it, which is
Bullet was one.
Yeah, like that
was surprising.
So
The bald one, I was very surprised by.
Yeah, it's like I also just don't. I mean, if your eventual goal is to rug, why do it so early?
Well, they probably made a lot on that.
but it's like it was a successful thing. It's like just let it live. Like
Yeah, but it's a meme coin. It's like how high, like
No. Bullet was like you played Russian roulette and it was burned based on the gameplay, and it was like growing users, growing volume. It just like didn't make sense. Like even if your ultimate goal was to rug, this isn't when you do it. When you do it when like it's slowing down or something. I don't know.
yeah, I think people were putting in like 10K clips to play this game. So yeah, like outside of the meme coins, the rugs, I think with Base too, there were like a few exit scams and then a few exploits too. Like I think every early dex on Base is like already gone. So yeah,
I thought Sushi was going to launch there. Surely Sushi won't get exploited.
Why do you think there were so many scams that launched on Base that didn't do this on Arbitrum or Optimism?
I think they just, I guess, took advantage of the hype.
I think one thing was like the one-way bridge was like an initial reason, because everyone just tossed the money over there thinking, maybe I'll get this back eventually.
Also, everybody wants to be early, right? That's like one of the main investment thesis in using any chain or any ecosystem is you want to be early. And you can't do that on Optimism or Arbitrum anymore. So you have the prime opportunity to kind of like take advantage of people, right? Because all this money is going to come in like right at the start. And this is like, if you want to rug as these people did, like that is when you're, I guess, going to do it. Like that Balt coin, people really thought it was like a serious meme coin that was going to go to like unironically like $1 billion.
It made sense
market
though.
cap.
Like it I think it had like decent EV as a bet because like, meme coin native to a chain, and you always had like, Degen, Spartan and others drifting around like, the investment.
Tell me you got rugged without telling me you got rugged.
Oh, dude, I bought everything on Base and got rugged.
No, because it was funny because like it all happened over the weekend, right? Yeah, it all happened over the weekend. So I like look at my phone Sunday night. I'm like, fuck, I missed this. And then like the next day it was rugged. I'm like, okay, didn't miss anything. Back to usual.
But I mean, to their credit, like I think a lot of liquidity has stayed there. Friend.tech obviously has done a lot, so it will. I mean, it'll be interesting to see what kind of the activity on the other L2s does, and like how much cannibalizing is this versus new users. And I know we've seen like Arbitrum and Optimism transactions tick down a bit over the last week. Not to the point that it's like everyone is just moving over to Base, but there is some of that effect. And I think Base is planning on, I think when they launched Base, it was like 10% of the revenue from the sequencer is going to go to token holders. And then they quickly, like ninja edited that to just say some fee share amount.
Yeah.
So
10 bips.
I don't know what. Yeah, so like I don't know what the exact is, but if they're only giving 10% back to Op and then they take a bunch of Optimism's users, it's still like a good showcase for the Op stack.
Jan, what bridge do you use to get on Base, like back and forth?
I used that like one-way address that you just blindly send and then hope there.
You haven't withdrawn
then-
yet? Just
Nah. I've written off what I sent over.
At least you didn't deposit to the Shiba random.
Yeah.
Whatever the Shiba L2 is. That was
Well-
like 2 million ETH gone right away.
I guess, what do you think, what do you think the success of L2s generally, but like base specifically, where people are kind of willing to ape in, mid 8 figures, nearly 9 figures on a like no UI bridge, and like meanwhile all L1s and Cosmos chains are like grinding their hardest to try and get people to deposit like even a couple million in TVL on launch day. Like, is it this like ETH philosophy, like ETH aligned thing? People want to be ETH aligned. I'm kind of skeptical of that. Or is it MetaMask? Is it like
MetaMask.
ETH address format?
definitely.
I think it's
MetaMask.
MetaMask.
MetaMask,
but, like,
and it's being early to the copy pastas. You know the playbook. Every time a new L2 launches, you're gonna have the lending. They're gonna have this. They're gonna have that. Like, being early is like a big part of it, and you know the play. People know the playbook, and
You
they know
get that,
that
like-
a lot of liquidity is gonna like.
The declining roller coaster, though, it's like everyone knows the playbook, so it's just like lasts shorter and shorter, and at a certain point, it's like very short lived.
Yeah,
But I think like one very like obviously the super differentiating thing about base is like you're gonna hope that if there's a bull market or just they make it really easy to like onboard people who just like they can only figure out how to like download Coinbase as an app, and then like all of a sudden the UI is like in their app and it's like super easy to do things, and like that is honestly like a massive distribution channel that like
I mean,
no one else
yeah.
has.
I don't see why you can't like actually just allow people to like just be in their Coinbase account. Like, consider if like GMX was, I mean, Coinbase wouldn't allow people probably to use GMX
Yeah.
through Coinbase, but like you could literally use the Coinbase centralized exchange UI and just use the apps in the back end.
Yeah, which would be
you
super
wouldn't even
cool.
have to.
What were the user numbers for like Coinbase retail versus MetaMask at peak hype? Because with base it's Coinbase, but Coinbase skews US, so whereas MetaMask on its own, it's everyone. So curious to
I think they had like
Yeah,
a
look at those
silly
numbers.
amount of users, like something.
I know MetaMask claimed like 30 million users at the peak. I don't know what.
This could be wrong. Oh yeah, Coinbase had 108 million users in 2022. That's a third of the US. That's like pretty insane.
Yeah, question is,
That's like a lot.
I mean, why would they move
Okay.
to base if there's an app that's compelling, or to get coins that aren't on Coinbase? So I gotta imagine a majority of those Coinbase users are just staying on Coinbase because like
What are they even doing on Coinbase? Like, what are these 108 million people? I'm suspicious of how many of these are active. Like, because
Cardano.
what are you doing there? Just like buying Cardano or whatever, like using.
There's like totally another world of people that honestly they make Coinbase accounts, they buy like XRP Cardano, and like that's all they use Coinbase for. It's like completely different world of people. I know this because I know people that are like this.
Yeah.
And it's like totally just it's just such a different world from everything we do and we deal with and we look at.
No, but it's like the average spend is probably like less than $50 sort of thing. It's like just like when this Bitcoin is like blowing up and it's on the news and like everyone's talking about it. Just
less
like
than
someone
50?
like probably for like
No.
a lot of these people. Like think about how many people just like hear about Bitcoin and then they go in and put in like $20. Like everyone at like
They must have these stats.
university-
Actually,
You're spending
right?
like
It's a
$10
public
to
company.
wire the money. So
No. You don't need it. You can pay with debit card. They charge you a cheap 4% fee to pay with debit card. Yeah, we can do average or median. Like, what's the best? Yeah, how many median Coinbase?
But I mean, so one thing, just back to the original point, like I think one of the reasons people are comfortable to put a lot of money into this L2 is just because Coinbase is not like going away. Well, probably not. We'll see. But they're like comfortable that their whole marketing team, their whole BD team is going to do their best to create like useful applications there. And being early on the chain is like going to be rewarding, and somehow I don't think they're ever going to drop like a token or anything that doesn't make any sense. doesn't work with that many
Okay,
global
the
trade
average Coinbase user slightly more than $5,000, but that's like
What's the
gotta be
median?
skewed super high. Where's the median?
I'd be surprised if the median's over $1,000,
Yeah,
especially now.
I'm thinking
Maybe
like
like
a
a year
couple
ago as
hundred.
well.
Okay, and so you guys think the main reason is MetaMask? Like if another chain supported MetaMask and gave you the feeling of being early, they'd also be able to attract users?
I don't even know. I mean,
Yes.
yeah, it's just easy. Yeah, like even if you think about to like 2022 near the tail end of the bull, like Aurora got a ton of like interest and a ton of farming going on there, and it wasn't built on Ethereum. It was just a bridge from Ethereum to Near, right? And Aurora was actually, it wasn't an L2 or anything. It was a smart contract on Near, but it was EVM, and they had like 300, 400 mil TVL, like pretty quickly, and then it was super incentivized, and now it's. But that's what I'm saying. Like people kind of like go and they farm and like they pillage these lands, right? And then it's like important to see like Arbitrum and Optimism have both done a pretty good job of keeping users, right? Whereas like no other L2 has really done that yet.
Jose, the only thing good enough is MetaMask or 20% yield on stables. It's the only thing that's gonna draw users.
I think people also like to use like ETH. People like to use ETH as money. So a good debate is like, is the bull case for ETH that you have all these rollups and people want to use ETH as the main monetary unit on all these chains, or is it that all these rollups are like
MetaMask is just
hosting and
easy.
paying
You
for
like
DA?
add the chain, you log on to synapse.com and you fucking bridge it over and it's there. And you're good to go. They give you a little bit of gas.
I mean, but it's not. But
ready
if
to
bridging
play.
everywhere is like bridging to a lot of places is not really that difficult. It's just the fact of going and downloading.
Yeah, it's also, I don't want to get anyone scammed. It's synapseprotocol.com. You don't want to. It's synapse.com. Just go through their Twitter.
Do you not have a ref link you want to show?
No ref link, but I don't want like someone to type in snaps.com and get fished. So just go.
Yeah,
through
but
yeah,
just also
but
you
yeah,
bridge,
like, think
bridging
about-
experience is bad, right? Like often you'll bridge and then you don't have like the gas token or whatever, or you bridge the thing that doesn't have liquidity and you can't get out of it on the other end. Like it's just like a
Are you
tough
talking about
experience.
bridges that aren't synapse or like to
No, just going to
Cosmos?
new chains where you're using a different gas token.
Yeah,
Yeah, think about think about Kanto too, right? Kanto got a ton
Wasn't
of
it not
users at the
EVM?
end of last year, and I was tracking this pretty closely to kind of see if like where these users were coming from, and it was literally all from Ethereum, right? There was no IBC volume between Kanto and the other Cosmos chains. It was all done through like EVM bridges, and then as Kanto kind of like died down, none of those users stuck around and like actually used different Cosmos chains. They all just came back to
What percentage
Ethereum,
of
right?
this stable market cap, like is USDC, like what percentage of USDC?
It's all on
is, like,
Tron.
yeah, is like
Tether's all in
non-EVM.
Tron, yeah.
But it's not EVM. Is there even like a little bit that's not EVM? I think it's like ETH are like the people who still have money left.
So
Like,
Solana's
in
the
the
biggest at
stables.
1.5 billion Solana. That's the biggest non-EVM. But Solana's also really the only like non-EVM chain for the most part, besides the Cosmos.
But yeah, I feel like this is the user point of view.
Chains.
Yeah, like just MetaMask is just really the gatekeeper. And then, but like, Jose, like what about, because you guys obviously really big fans of Cosmos. So like, do you think that it'll attract more developers in like 5 years from now, or like just because the language is better? Or like this, I don't know what I'm talking about, but just curious on why.
Yeah, I mean, I think app chains in general will be attractive to developers. I think there's a bunch of use cases that require like customization at the chain level, or where you want to like own your own block space, and especially customization. App chains are like the best solution for that. And I think Cosmos SDK specifically is kind of like there is no second best in terms of deploying your own chain and customizing stuff. Owning your own
even
block space, there is
L2,
a second best.
Like, yeah, like,
Yeah.
like relative to deploying your own L2 or L3 or something.
Yeah, definitely. It's pretty hard to, yeah. It's actually like not super easy to customize an L2 with Upstack or whatever. It's like that's a better option if all you want is to just like control your own block space and have your own kind of like environment. But I think for customization, Cosmos SDK is still best. But obviously, there's I think a lot of intellectual and financial capital. I think the biggest risk is that ETH kind of takes the modular thesis and like and the app chain thesis and like out executes Cosmos at this point. But yeah, I think I think another kind of thing is like you want to see a bunch of app chains that make customizations that are super valuable to users, right? Like I think once DYDX launches and they have this like validators can extract MEV or like some of the other stuff they're doing, like the in-memory order book, like these things kind of like show the power of customization, which you haven't really seen so far. Like all the Cosmos chains, like Osmosis does some cool stuff for sure, and some of the others do, but like it hasn't been like a feature that's important enough that's worth giving up like the UX and liquidity benefits of Ethereum.
Yeah, DYDX.
Yeah, I'm curious. I know. Yeah.
Here, just on DYDX, is they have like probably the best UX in like for a crypto app that I've personally used. Like definitely up there. So do you know what their plans are for bridging? Because like they seem to be very product first, like focused in terms of like easy to use. So do you know how they're gonna? Because right now it's just like you deposit from Ethereum into their smart contract.
It's going to be similar.
And you just click around. But how's it going to work on their Cosmos chain?
Yeah, it's going to be very similar. Go ahead.
From
no,
their MetaMask?
I mean, they're using MetaMask and everything still.
Yeah.
Really?
You can go.
How do they do that? How
They're gonna have
they can
bridges.
do that versus the other Cosmos chains?
Injective does that too.
You can have any. I mean, you can build Cosmos chains in like any language too. That's why you get like different VMs for Cosmos chains, right? You have EVM chains like Evmos, Canto. You have Cosmosm stuff. You have Agoric, just like JavaScript. So
they're gonna still be
Barrett
technically
coming.
EVM.
I don't actually know off the top of my head.
DYDX?
Yeah.
I don't think so. Well, I think they're building it in Cosmos SDK mostly. Like, and they're not going to have smart contracts enabled, right? It's not like a permissionless L1. Like you're not going to be able to deploy contracts there. So I think they're mostly building it in Cosmos SDK. So, yeah, I think some of those launches, like also kind of Namada and stuff like that, are going to kind of show the power of this a little bit more. And also, I think native USDC is going to be huge. I think MetaMask Snap could be big too, making that MetaMask integration easier. But yeah, I'm curious. I know, Ceteris, you have this take on like L2s being a sovereignty play rather than a scalability play. I don't know if you want to.
Yeah, I think it's more of a sovereignty that it's really, if you've paid attention to the narratives over the last year, it's really changed from the scalability narrative to this like own your own stack, create your own custom app chain, app roll up, whatever you want to call it. And that's kind of how they're getting people to come over, because right now you just have a million different general purpose EVM chains, which I'm like pretty big critic on like the actual point of that. Doesn't make much sense to always create these general purpose chains and like just recreate everything. But yeah, like that's the whole Celestia thing too, is like you want all these different gaming rollups with their own modifications to like specifically allow this game to run. You don't have to worry about like security, anything like that. So that's like the big direction I see it going in. And then I also see like a fragmentation of kind of like social consensus. If you look at the L2s now, they're all fragmented. They're all getting into their own, not just like liquidity is getting fragmented, but the actual social backing is getting fragmented. So like everyone who's building rollups for Ethereum, they all love like ETH, they love Ethereum, they're all Ethereum aligned, all this. But now they're all going to their own silos of like the Arbitrum stack, the Optimism stack, the Polygon stack, like Starkware. And so now you're just like kind of moving down these, you're just fragmenting the social consensus more. And you're creating like new kind of like independent ecosystems. And so that's what I think will be like
The money.
the L2 wars have kind of been like kumbaya, and everyone's at like these layers, these stage 0 roll-ups where they're all like super protected training wheels and all this. As soon as the first roll-up actually launches like permissionless rod proofs, and takes off a lot of the training wheels, now there's like a lot of pressure on the other roll-ups, right? Because you got to think about it too. Roll-ups are seen as like an asset to Ethereum, right? Because they're like extending ETH asset and everything. But roll-ups can also be a liability, where if you get some roll-up that gets, like, let's say in the future some roll-up has like 10% of ETH and then the bridge gets exploited, like that's a massive decision now for the L1 to make. Like,
10% burn.
what are you going to do? What are you going to do, right? You're going to fork the L1, and then you're going to have this one L2 ecosystem where they're all like, no, like we're not forking the L1 for those guys. They were reckless. They didn't have proper security, all this. And then you have some people who like have assets on ETH in this one roll up. So there's definitely a level where like the amount of ETH that's in one of these roll ups kind of switches to now becoming this liability where like if anything happens, like you can look at the Shiba chain, okay? Obviously you're not going to fork L1 because the Shiba guys lost like 2 million of ETH in there, but it's a different story if it happens to one of these big rollers, right? Yeah. And so like what's the level at where this starts to come into play? And politics is going to be a massive thing. So I think, yeah, the L2 wars are going to get like probably nastier over the next couple of years.
How many years away are we from like base ETH scaling, like base L1 scaling?
I don't even think that's happening anymore. Is it?
They're not really focused on it. They're going to do some dank sharding, like data dank sharding, like probably 5 years out or something. They're really not focusing too much on the L1. They're doing some cool things. But yeah, it's mostly focused on L2. And I know Vitalik is like a big ZK bull. He thinks if you're like making anything today, you should build with the assumption that like you can prove this in a circuit, which is how they would have built the EVM if they knew when they did it that like this would be possible in the future. So
how does that bode for like alt L2s or all L1s rather, in your eyes?
Alt EVM L1s, like, I don't know. I mean, alt EVM L1s will actually probably be cheaper than some of the rollups because Ethereum block space is just expensive. So you could actually kind of do that. I think the alt L1s, I mean, when we talk about alt L1s, who are we talking about? Like
Solana.
Aptos, Sui, which are like way too new to really say anything about. I think Solana is just like actually creating a unique differentiated product of having the most scalable single layer, single chain, fastest. It's like makes a lot of sense. And so it's not just a copy pasta L1 that like they're actually doing something different that has a use case. So
yeah, I agree.
I see them as like a very noble like.
What about Cosmos then? What are your thoughts on like app chains in the world of sort of like Celestia and like a lot of these roll up as a service things, which are eventually going to become more and more customizable themselves? Is there like a reason to trust these like smaller validator sets, or should everything just be a roll app like a?
Well, it depends what you want to do. It depends what you want to do. I think we could see a lot of Cosmos chains, instead of launching as Cosmos app chains, launch as like Celestia rollups. Mm-hmm. And if they all share this DA layer, then they get a lot of like safer bridging between them. And then you can still kind of do some of your skip, like customized block building, stuff like that, with your own sequencer set and all that. So you can actually have a similar construction, I guess, to a Cosmos app chain today. It's just instead of having DA yourself, you just outsource it to like Celestia. And I could see that being a model. I agree with you that for app chains, it's the same thing as Solana. Like they need to create something that is truly like unique and a good experience for someone to want to use it. And right now it's mostly been creating a bunch of like DeFi primitives. And I don't know if just like creating a DeFi primitive as an app chain is enough, right? You actually need to like do unique things on top. So I think we're seeing that more. I think there was just way too many app chains that launched too, and with like high staking yields, and everyone like, you know, they like those high nominal staking yield and just token inflation. There was a lot of early vesting. So there's been some pretty bad app chains overall in like Cosmos Eco, but there's definitely some cool stuff. And I think Cosmos has some of the smartest people too. Like they're ahead of a lot of trends. It seems like Ethereum Eco seems to benefit from a lot of the ideas.
Yeah.
And like Skip, for example, super early on this localized MEV capture block building.
Yeah.
And you see,
and it works. They've shipped really quickly.
And it works.
But there's just there's just not much MEV when there's no activity. Is kind of the issue. But yeah, they're doing some really cool stuff. Go on, Duncan. You were smiling. What do you want to say?
Okay, well, I might be losing my mind, but I just like relaunched my trading view, and I'm pretty sure there's like a little pop-up of Elon Musk smoking the joint when I clicked on the Tesla chart, but then it disappeared really quickly. Has anyone else seen this? I could be losing my mind, but I swear to God, it's like a little cartoon that came out in the corner, and I could just be like completely losing it. But
do I have to go to the Tesla chart specifically?
Yeah, like I was just flipping through and I saw like, I don't know. That's just like, it was very vivid.
Before we wrap up, I know we discussed like some macro stuff.
Yeah.
Jan, Duncan,
I was
you guys
that's
wanna?
why I was pulling up trading view, just to get the prices ready for everyone.
All right, nice.
Spit some
Go on then. You've had some remarkably good timing this year. You got bearish like the day before market drop. Go on.
Okay,
Take a victory lap.
Well, I think the initial message I sent into like, we have a 100-person group chat, and basically it was the day where, so during June and July, like S&P was just making new highs every day, and Bitcoin was just like, it had that big run from the ETF news, but it just like couldn't really seem to like keep up, or like not keep up, like obviously it has some beta there, but like it wasn't continuing to make new highs. And then on the day that Ripple won the case, let me try and find that day on the chart. This is just taking a second. But basically, like Ripple won the case against the SEC. They're not a security. Woohoo! That was like August 8th. Or sorry, not August 8th. That was July or Thursday, the 13th of July, and we like wicked up to like 32K almost, and it was just like peak euphoria. The ETF was coming. You know, our altcoins aren't securities. Like S&P's making new highs every day, and then we just like rolled over pretty quickly. And on July 12th, like the government had sent like 10,000 BTC from one of the seizures to be sold on Coinbase. But kind of since then, we've just been really weak and just kind of like chopping sideways, and volume's been falling off pretty aggressively. Kind of lowest level since 2020. And with that kind of happening, like I kind of felt like the only thing that was going to like save the market is like this ETF actually going through. And then as people kind of start extending their timelines on the ETF, okay, like maybe it's not coming like before the end of the year, maybe it's like, you know, January type thing, then I think like the market's just kind of like slowly bleeding. And until there's like firm news on the ETF, or like, you know, Grayscale makes some advances in their case to convert GBTC to BTC, then I think I'm like pretty kind of negative about, because like crypto specifically, like you just have like really low volumes, you know, just kind of really shitty price action. And then just more broadly on like the macro stuff, like this is where it's like I feel way less confident, because like, you know, we're all guessing here, but I think a big risk for the second half of the year is like, you know, higher yields on the long end of the curve, which, you know, brings down like tech valuations and equity valuations, and like, you know, and why I think that, or I'm kind of rambling. If people want to jump into the crypto specific stuff, then we can go back to like more macro, but I've just been feeling like ill when I look at the chart, and then we had like that big 10% puke.
Yeah, no, it definitely looks like, I mean, it's clear a lot of market makers and liquidity has stepped back just based on, the there's more liquidations whenever that day was a couple days ago than we saw when FTX went down, right? Like this is so it's clear like there's a lot less liquidity. I think there's a lot of just general apathy where, people are kind of holding and just waiting, and then others are kind of waiting for the news. And so like part of what was so bullish when we were running into like the higher 20s a couple months ago was, everyone knew a bunch of people that were sidelined, and so that was always like, oh, there's still a lot of people that I have to chase, and so I think that was kind of what drove it quite a bit. And yeah, like Duncan mentioned, we couldn't break through low 30s on just a mountain of good news. And like coupled that with declining volumes, you kind of just see a bleed lower. Yeah, it probably kind of gradually bleeds down. I mean, so like S&P wise, or I guess like taking a step back, the economy itself is still really healthy. You kind of have a disconnect where the strongest companies are still really well positioned. Like, if you're looking at data in terms of how they're set up, like 80% of long-term debt in the S&P is long-term fixed. Sorry, 80% of debt in the S&P is long-term fixed. Half of it matures after 2030. And then in terms of like interest costs relative to profits, like these are the lowest on a percentage basis in basically in history since, going back 40, 50 years. So I think a lot of companies, at least the larger ones, refinance and aren't really feeling the squeeze on this. But at the same time, you do have like a step up in bankruptcies on the smaller side. So you have less well-funded companies kind of starting to struggle. Then there's, the big chart going around showing how much savings have been depleted over the past year or so. And that in particular, just based on the current trend, is going to end in at the end of Q3. And so you start to see the retail, or just the general consumer tap into likely, what is the most expensive form of debt, which is credit card debt. And that also gets hit the most by interest rates. And then at the same time, with the unpausing of student debt, that's also going to put a kind of cash crunch on the consumer. And then at the same time, you have, the Atlanta Fed projecting GDP in Q3 at I think it was like 5.3%, which is
5.8
nuts, right?
the last number is just silly. But yeah, back to I guess like the crypto specific stuff, because like we can talk about macro, but I feel like there's probably like better people to listen to on macro. But I think like if you look at the chart on like if you look in the chart, the Bitcoin chart, I think like and I was pointing this out to Jan like right before we had that 10% day, but if you look on like March 9th, right before the bank,
It was all in the charts, Duncan.
No. Just listen to this. So in March, like right before, like as the SVB and everything was going under, like Bitcoin looked like it was going to zero yet again. And then we had like the BTFP facility, which obviously like massive rally, like completely news-based rally, massive rally. And then same thing, like Bitcoin was rolling over pretty hard at the end of June. And like, again, looked like it was going back to the Shadowlands. And then we had the ETF news, which was like a massive rally. So like both of these like massive impulses up since just kind of like the recovery from FTX have been like news driven events. One of like the Fed kind of pivoting, like restarting QE with the BTFP facility, and then the other one was the ETF news, right? So I think if we're not feeling like super hot on macro and like just volumes are really like weaning out on crypto, then I think we're probably just kind of chopped to bleed until like as soon as the ETF comes, I think we're going to get like a mega candle and it's all going to be great again. But up until that point, I don't really see what's going to take us higher. And then also like you have just like a really low liquidity environment where there's still these like massive FDVs where like seed investors and like VCs are just sitting on still like insane gains, like stuff like Aptos, and I don't know much about the project, but what's it trading at, like a $5 billion FDV with like a pretty low float, and then those like big unlocks coming this year. So it's like coins like that are just going to continue to suck a lot of liquidity out of like the already thinning like liquidity in the system, with like volumes at lows. And then right before we had that negative 10% day, the other thing that was really concerning is Bitcoin puked like 1%, and then we saw like a lot of majors down between like 5 and 15% just on a very small Bitcoin move. And probably not the best person.
I think on that point with like the unlocks and stuff, it's no surprise why on-chain has been coming back pretty well recently, because the people that are like still around don't want to like hold those big unlocks.
Yeah, and like what does something like WorldCoin?
It's also not like super compelling in terms of value prop.
Yeah. And like what does something like WorldCoin do to liquidity when it launches at a $30 billion market cap? And like it just obviously it's bleeding.
Yeah.
Like how much does that suck out of the system as people are just selling into that? Like that's like a massive drain on liquidity that a lot of these alts I feel like are gonna have, and people just kind of get suckered into buying them. Just like the small amount of marginal dollars or like capital flowing into these alts that just have massive FTVs and just have a ton of sellers because their investors are up, silly amounts on the seed round.
I think there's like buckets though, right? You have a small bucket of people that are going to participate in those games, and so by some extent, the market makers that are going to be down in those positions have to hedge elsewhere. So like I think that's how it can impact some of the majors. I don't see that many people really shifting exposures to participate in those. So I think ideally it'll be less of an impact than possible. I mean, the biggest issue right now is just there's no new money flowing in, right? And then that's
the other thing. Stable coins are just down and to the right.
Yeah. I think the stablecoin point though is somewhat overblown if you kind of consider it relative to where the stablecoin market was relative to market cap in like 2020, right? So like on a relative basis, you still have a lot of room to go. So I think, if you look at it in a silo, yes, the trend is bad, but on a relative basis, there's still an exorbitant amount of firepower relative to market cap compared to kind of the 2020 levels.
Yeah, I mean, even though stablecoins have been redeemed in mass, like compare stablecoin percent of overall market cap has been like up only for the last year and a half, 2 years. Yeah, I mean, Duncan, coins went down like 80%.
Yeah, I guess so.
Yeah, then the other fear is U.S. selling into no liquidity, right? If
the government just dumping into
the government
nothing.
tokens, into a low liquidity environment isn't great. Ideally, they'll wait until ETF launches.
I don't think they really care too much about their execution.
I mean, it's a lot of money.
It's a lot of money, yeah.
There's some big stuff going on this week though, right? Because we got Nvidia tomorrow, and then we got Jackson Hole on like Thursday. Those are both like two pretty massive market events. So
here, Ceteris, I'm sending into our chat. Yeah, your stablecoin chart that you will want. It's been up only until like the start of 2023. Then it's been down a decent amount since the start of 2023.
I mean, it kind of makes sense because everything's up like 2x.
Yeah, but the important thing is like relative to where it was before.
Yeah,
yeah,
for sure.
It's still elevated.
Like, yeah, I'm just like probably bearish until the ETF happens. That's probably where I'm gonna sit. Except for a select few amazing coins.
Which we'll have to buy your shares to find out which ones they are.
Yeah, I'm gonna have to launch in Friend.tech and then I'll show you guys. But I honestly think like just in general, if you want to talk about like obviously like not financial advice, but if you're still around, like sticking around and like doing research right now, I think like the best thing you can be doing is like looking for like projects like on chain. Like no, I don't think you're really gonna do that well just buying ETH or BTC, especially if like you're listening to this podcast and you're like this deep into the space. Like I would go like a mix of like stables and looking for good alts. Or that's at least what I do, rather than like BTC and ETH. I just think it's pretty difficult to get any sort of edge there.
Yeah, I think it depends on your size too.
Yeah, depending on your size, for sure.
we can. Oh, do you wanna give some more? Do you want to finish up, Duncan? I mean, we'll do closing thoughts from everyone, and then I think wrap up because I think
I don't have to like closing thoughts on what we kind of like. We don't have to rehash like
We're going to
whatever you want. Macro, what else? Duncan can show Synapse and GMX again. Whatever.
No, you're gonna have to buy my Friend.tech shares to figure it out.
after the box.
Once they launch.
Yeah, I don't have any closing thoughts. I think that like Friend.tech it's nice that people at least are like excited about stuff, and I think even though it's been like pretty
but like this is honestly
like a bear market
of how dead everything is. It's like a Friend.tech is like all anyone can talk about on crypto Twitter for the past week, and there's like 500 holders of like whatever, like the top like share.
That's not all anyone's talking about.
It is.
Nah.
I think that
I think that's an exaggeration. Nah.
Yeah,
It's a
you're
lot.
just not
it's
in
like
the right.
50% of my
I don't know.
timeline.
You need to upgrade your timeline.
Okay.
I mean, hey, people are still
Show me
doing.
some
People are still
follows.
doing. The last like few months, people are still doing stuff. Like they still use the chain. They're still doing stuff on chain. It's like there's still some floor amount of like, activity that will never leave.
Like, the jokes were like it's the last like 12 like people just trading against each other. I don't think it kind of feels like that's
And
true.
now, not only are they trading against each other, but they're trading each other's shares against each other.
But it's all like, I guess Friend.tech is just an example of like why it's not hard to be bullish ETH in the long run, as like any form of mild innovation, successful or not, is more so solidifies ETH as money and kind of everyone's kind of denominating in ETH. It's adding to burn, adding to activity, not nearly the same extent as some activity on L1, but
Yeah, I really like the analogy. I forget who used this, but it's basically just like ETH's a massive casino and gas is the rake. And I just think like until there is that truly like transformative like thing that's gonna like change your get like hundreds of millions of people onboarded, that's kind of like the truth of it right now. It's just like these are really cool and accretive things for ETH, and they're gonna keep on popping up. But like until that happens, it does feel like that's a pretty good analogy.
All right.
Yeah.
With that, we're gonna wrap up on that bullish ETH note.
Ultrasound casino.
But like I'm very bullish long term. It's just like right now it's kind of sad. Which is when you should be looking for good coins and buying. Not financial advice.
I mean, there's a lot of cool stuff being built. Like, if you subscribe to the research, read any of the reports, if you see any of the stuff's being built across the L1s, there's really cool stuff being built. Like, probably more than ever. I actually think it's more depressing at peak bull when it's just like, depressing in a certain sense, where it's just like, and this might be just cope, like the smiling mask thing.
yeah.
Oh my god,
Like,
I'm
it
was that depressing.
1,000% on my Dogecoin position. Fuck.
It was depressing seeing all the like the amount of just like bullshit though. Whereas now the people that stick around are actually doing mostly things that make sense, or that could make sense. Yeah, probably just cope. Anyway, on that note, we'll call it. Thank you very much for tuning in to the second episode of the Hivemind, and see you in 2 weeks.